Hi everyone, welcome to our channel where we help your real estate investments work harder for you. I'm Samantha from Elevate Realty in Toronto. In this video, I'm going to give you my 5 best reasons why you should add Toronto real estate into your investment portfolio. I'm not saying you should only invest in real estate. I definitely think investing in stocks is a great idea. You can invest in great companies for under $100. It's super easy to buy and sell by yourself online. There's low transaction costs and it really doesn't require time to manage it. But of course, we think that Toronto real estate is a great complement to investing in stocks. You know the saying, don't put all your eggs in one basket. Well, diversification is so important when it comes to investing. In fact, I'll explain how you can actually improve your returns while lowering overall risk when you add Toronto real estate into the picture. So if you want to learn more, then keep watching. When prices swing more, there's higher uncertainty in the market, which translates to higher risk. So how does Toronto real estate and the stock market compare? Let's take a look at what's happened over the past 20 years. Here you can see that the blue line represents the average price of Toronto's real estate, and the red line is the S&P 500 index. When you compare these two lines, Toronto's real estate does appear to fluctuate less compared to stocks. Now, for those stats fanatics out there, you might remember that a higher standard deviation means more volatile prices. So just for your reference, the standard deviation for Toronto real estate here is 0.04 and the S&P index is 0.13, which confirms that Toronto real estate is lower risk. Now, intuitively, you'd think that both real estate and stocks correlate to the economy. But if you actually look at the numbers, you can see that they don't always move in the same direction. For example, during the stock market crash in the early 2000s or during the subprime crisis in 08-09, where the S&P had double-digit percentage drops, Toronto's real estate stayed relatively stable on a year-by-year basis. So if you had real estate in your portfolio during those years, you actually would feel a lesser impact from the negative swings in the stock market, which ultimately makes your entire investment portfolio lower risk. After we look at risk, let's look at returns, and we usually associate lower risk with lower returns. But the interesting thing about Toronto real estate is that this is not the case. Over the past 20 years, Toronto's annual appreciation was around 7%, whereas stocks grew by 5% per year, which means Toronto's real estate actually outperformed the S&P index, even though it's lower risk. But let's zoom into the last 10 years. When we do this, you'll actually see that the S&P index did outperform at 12% per year compared to Toronto's real estate that grew at 8% per year over the past 10 years. So this really confirms that stocks are higher risk, but they do have the potential for higher returns if you buy and sell at the right times, whereas Toronto's real estate will provide more stable and better long-term returns. I also want to point out one more thing, which is the fact that these numbers don't take into account rental income or stock dividends. Now, Toronto's rental cap rate is around 4.5%. And if you're not familiar with cap rates, this is basically your rent yield. On the other hand, the average S&P dividend yield is less than 2%. So with better yields, Toronto's real estate looks even better. The third reason why you should add real estate to your investment portfolio is because of leverage. Banks consider real estate as lower risk, and because of this, they can offer great mortgage rates. Typically, we're looking at a 20% down payment, and right now, variable rates are at around 2.35%. If you get mortgage insurance, you can lower your down payment even more. When you trade on margin with stocks, you'll need a margin requirement of at least 30%, and borrowing rates are higher at 2.75 to 3.75% right now. You also have to know that margin trading with stocks is pretty risky. If prices swing the wrong way, then the banks will ask you to top up your margin requirements or you'll have to unwind your position. This rarely happens to house mortgages because there's more stability in the markets. So basically, lower interest rates mean higher profits and lower down payments mean a better return on your investment. So again, including real estate with leverage in your portfolio can further bump up your total portfolio returns. In terms of control, stocks are passive, which means you don't have the ability to improve your investment's performance because you don't actually work for the company. On the other hand, owning real estate gives you the option to do more to the property, which means you can get higher forced returns even when there's a downturn in the market. For example, if you put in renovations, you'll upgrade the property's value. If you want to learn more about forced appreciation, check out this video where I dive into how you can get higher returns with value add work, and I'll also put a link to this video in the description below. Finally, let's talk about principal protection. Large cap stocks are pretty secure, but they still have a chance of getting completely wiped out if it's not handled properly by the company's management. On the other hand, land is valuable because they're not making any more of it, and demand for housing keeps growing in Toronto. So this makes real estate hold its value and even increase in price over time because of simple supply and demand. So if you're concerned about principal protection, owning real estate will give you more security in your overall portfolio. So after this video, I hope you have a better understanding of the unique profile of Toronto real estate investments. Income properties typically need to be a longer-term investment compared to stocks because of higher transaction costs. But if you can afford it, adding real estate to your investment portfolio can reduce overall risk while increase your total returns. Like all new skills, real estate investing can seem intimidating, but that's why we're creating these videos to help you out. So if you like this video, please give us a thumbs up. And don't forget to subscribe to our channel for more weekly videos like this one. Our team specializes in real estate investments in Toronto. So if you need help with this, we're happy to arrange a free discovery call to get you started. I'll put a link in the description below so we can coordinate a time to chat together. Finally, I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video.